It's about that time of day again here, boys and girls. Welcome back. Welcome back. Newsletter time. JJ here. Nightly newsletter. Wednesday evening, January 28th, 2015. And what a doozy of a Wednesday. I should also mention Happy Fed Day to you guys. Nothing new out of the Fed today. We had FOMC this afternoon. We had inventories this morning. And boy, I guess we got the reversals we talked about from last night, right? The title of last night's newsletter was 3 price reversals for Wednesday, and that is exactly what we got today. What a fantastic session we had. Hopefully you were able to use our newsletter from last night to make some nice profits in today's markets. Very, very easy stuff. Selling gold, selling crude, selling Russell. Pick your poison, boys and girls. This is the good stuff right here. This is what day trading is all about. Forget about the news. Turn off the television set. Trade that chart. Trade that chart. Boy, what an incredible year we've had so far. I could go on and on about this stuff. I'm all pumped up here today. It's been a great day. Been a great week. Students are kicking butt in the trade room. Anyways, before I jump into it for tonight, I want to remind you guys here, don't forget to watch this video on our trading blog. If you're watching the video on our YouTube page right now, you'll notice we have a very, very robust YouTube channel, but I need your attention here for a moment. There's a link below the video. If you're watching this on the YouTube page, it'll take you right here to our blog. 3 reasons why you should be watching this video on our blog. The first reason is you can download all of the charts that I'm going to go over this evening in the video. You can download all those charts right below the video, right where I'm circling, where it says click here to download today's charts. Okay, grab those charts right there. Second thing, upper left-hand corner. Maybe you're wondering, how do we use these levels every day? How do we actually make money off these levels? No, I swear I'm not just picking them out of the sky, right? I promise. And I'm going to show you live in real time in our trade room. Come out and join us as a guest. If you're not a member yet here at SchoolOfTrade.com and you're curious about what it means to be a member, grab that free pass, upper left-hand corner. And last but not least, that's right, there were 3 things. Name and email address, pardon the ugly mug right there. We've got a nightly newsletter mailing list. If you'd like to get an email from me every evening when we send out that newsletter, now you never have to worry about missing another newsletter ever again. Join the newsletter mailing list by giving your name and your email address. Now, just a heads up, guys, if you grab the free pass or if you register for the newsletter, I'm going to send you a verification email, so make sure you check your email. And if you don't see it in there, check your spam, maybe your junk, okay? You never know where those emails will go these days the first time we send it to you. All right? Looking good, looking good. Helmets on. You got your snow boots laced up. Boy, it looks like Juno spared the tri-state area, right? We only got about a little bit less than a foot of snow in New York City, right? All those shenanigans about closing down the subways and everything. I think they did the right thing, but it's too, they didn't get nearly what they were thinking. Boy, my hometown though, Southern Maine. Boy, got clobbered, something like 3.25 feet, and it's still snowing, and there's another one on the way. Whew. Stay warm, stay dry out there. Stay warm, stay dry. Those New Englanders, though, they know what they're doing. This is nothing. That's a dusting. All right, let's jump right in. We got a lot of stuff to talk about here. We're going to start with that funny yellow metal they call gold futures. Now, if you were wondering why it was so herky-jerky today on gold, remember today was Fed Day, and so on FOMC Day, gold's the biggest culprit for being affected by FOMC. Why? Because the monetary policy is what's being discussed on FOMC Day, and of course monetary policy, the knee-jerk reaction is of course gold, right? That negative correlation to the US dollar. So that's why gold was all slopped up here today. One thing I want to remind you guys here as we go over gold, we are going to be rolling over here, probably not tomorrow, probably on Friday, maybe next Monday. Remember, we're going to do the rollover when the volume rolls over, okay? So when the volume moves from the 215 to the 415 contract, it's scheduled for January 30th, but, it can be a day before or a day after. So I would be checking that volume tomorrow morning at about 8:30 in the morning and see which one has the volume. And do that tomorrow, do it Friday, and then do it next Monday if we didn't roll over on Friday, okay? So just be aware of that. You will have gold rollover on Again, most likely on Friday. Most likely on Friday. Okay, so now we know to look for rollover. Gold's bearish. We get exactly what we expected out of gold today. A little bit sloppy, a little bit slippery, FOMC day. Very, very important we understand right now what's happening on gold. We're definitely bearish. We got the reversal we talked about yesterday, but we're trading inside of this very obvious range. This trading range, very easy to see. Top around 96.9, bottom around 73.5. So this is your job for tomorrow, is to stay patient, looking for ways to get short up near these highs. Okay, that's what my plan is for tomorrow. This is going to be easier said than done because we might just go lower. If we do go lower, the problem is we've got some significant support waiting for us down here, 77.4, 74.9, 73.5. So the best trades are going to come selling gold at these highs, selling off these highs. That's where the easy money trades will come. If we go sideways right in the middle, what you're going to do is define a shorter term trading range and sell the highs of that range. So if we go higher, don't take the bait, look to sell the highs. If we go sideways, okay, which is very likely here as the markets digest FOMC tomorrow morning on gold, if we go sideways, make sure you mark up that range and sell, sell, sell up at the highs of that short-term range. The problem arises if we go lower. If we go lower, I really don't like the sound of selling short right away if we go lower. It's one of those times when being a trader is difficult because, you know, what comes naturally to a human being is really usually the wrong thing to be doing on, right, if you're a trader. So what you got to be careful about is that low right there. If anything, you're a buyer at that low, right? But then you're going counter trend. So if you do take a nibble on this, you can buy this 77.4, you can buy the 73.5, you can buy those, but you know what I'm going to say, you're going counter trend. So make sure you understand that. Tighten up that stop. Take some profit quickly, lock in some profit, lock out the risk, and see if you can't hold this thing back up to the highs, okay? So the goal is to buy the lows carefully, sell the highs aggressively, okay? And then if we happen to break through that low, again, look, this becomes really tough. You've got this trend line down here, right? And so I guarantee what's going to happen is there are going to be some sellers down here that try to get a little perky, and of course, you know what's going to happen. It's going to rattle around here a little bit and then boing, right back up. So be very careful as we go lower to be a seller here right now. The ideal scenario is we break below 73.5, we retrace back to that low, and we sell. But the problem is that darn trend line in my way. I just think that's going to be a real buzzkill for us at the sell side. So really, the sellers are either looking for the sideways range to sell short there, short at the highs, or if we go lower, a little nibble on those lows, lock up that profit quickly, hold on to a runner, and try to get it all the way back up so you can then sell it short. Okay? If it takes off at the downside, if you see it blow right through, then of course you know we're off at the races to the downside and we got target and target. Now looking at the volume here, just real quickly here, last but not least here, the volume spike, okay, there wasn't really any lower lows here. I use volume to confirm the lows, right? And we saw that volume going down earlier this week. That's why I said we're probably going to go higher before we go lower. Well, right now, that volume spike, the highest volume of the day was right smack in the middle. What does that tell you? Think about that for a second. The first clue is the range, right? That's the first clue. The first clue is we're in a range. Okay, the technical clue that I use first is I can see them in a range. Then I say, all right, do we expect the range to break? Do we expect the range to hold? That's where volume comes in. You can see there's not a lot I can use here, but what I can use is what I call a volume spike. It's just kind of it's the highest point of volume for today. It's pretty much the highest point of volume for the last 2 days. And look where it puts us, right in the middle there. That tells us that that's where traders see value. And so, again, sell the highs, buy the lows, err on the side of sellers because you can see the lower lows and lower highs. Okay? I know there was a lot to cover there on gold, but as you can see, there's a lot to talk about there. Now, this chart really looks a lot better, right? Doesn't it? This chart really makes us look a lot, I think the word is bearisher, the more bearish of the bear. I don't know, but we know gold is bearish. This chart looks delicious, right? I mean, this just looks like something I'll eat. This is great. We got nice channel going down, just a tasty, tasty channel on the way down right here. No doubt about it. We're below all the key moving averages. Very, very easy to see. Okay, really the only thing that would have been better is if we nailed that low right there and broke that low there. That would have been even better, but obviously we'll take this. So keep selling at resistance overhead, and see now we have another little range here, and you can start seeing, okay, now we're talking 1288.2, 1290.4. Okay, so keep selling these range highs, keep selling these levels, and remember, we're not blindly selling. Okay, do not blindly do anything, right? Wait for what? Wait for the pattern and wait for the trigger. If you don't know what a pattern is, if you don't know what a trigger is, come out and see me tomorrow afternoon. I'll open up my trade room for guests. Come in, I'll teach you all about it. Or take my trial. My free trial will teach you all about that stuff. It's very, very easy. Okay? So check it out, or give us a call here in the office, whatever. But bottom line is, guys, you do not have to do this alone, and you don't have to do this by going in and out of forums and watching a gajillion YouTube videos. I can tell you right now, guys, if you're relying on YouTube and those anonymous forums that are cluttering up the internet these days, okay, I hate to break this to you, but you're going to be there for a while, okay? So be careful with that stuff. We get a great plan for you guys. Sell these highs, targets the lows. You can see the green levels below. Those will be your targets for tomorrow here on the gold as we go lower. Alrighty, and then last but not least here, here's a doozy. This chart is a doozy. Good looking chart here. Here's our gold price action to wrap up here on gold. The bear channel, which we already know about, but remember, this is a very different chart. Okay, this is a tick chart, whereas the last chart was a JJ chart, which basically is a range Renko hybrid. Okay, so variable open, high, low, close on these candles, static open, high, low, close, or fixed open, high, low, close on the JJ bar chart. So we know this is a much different look at it. You can see here off the highs, we got that channel. You'll notice here we got the break, we got the one down. I'm expecting gold here to try to make that run down to 77.5. So I do expect gold. Remember, that's exactly what we want to be careful about, which we talked about on the first chart, right? If it goes lower here, remember, that is the low of that range here, right? That's this would be your range that we saw first. So as we go lower, remember, don't get too greedy down there to start selling here. Okay, take the sell now, but be aware we're going to bounce most likely off of that low. Okay, so the recent channel break and the retest of lows tells us to expect this move to continue lower. So look to sell overhead resistance levels on the way down. Look to keep selling at these highs overhead. So nothing really new. Nothing really new. Keep selling those highs on gold and collect your profits at the downside. Here's another market that gave us a great reversal. We nailed this one, didn't we? Right? Give yourself a pat on the back on this one, guys. Perfect execution of our volume analysis from yesterday, right? We knew we were likely going to get a reversal. That's exactly what we got. In last night's newsletter, we analyzed these highs and we said, oops-a-daisy, that doesn't look like we've got confirmation, right? That was last night. That's what told us not to expect this price to go higher and to expect the reversal. That's why I said look for those reversals. And so you can see here the buyers just couldn't hold. They couldn't hold. Remember, I am still bullish as we went lower. I'm still bullish at that point, right? Because anybody can put together a one-day drop or a one-day rally. But where we turn really bearish here is when we see the buyers go, ooh, 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 oh, crap, right? And they whoop, and it falls out. Right? That's when it becomes bearish. Okay? It doesn't become bearish with the move off the high. The move off the high is just a pullback. Okay? That's all it is. But that pullback becomes a reversal when the pullback, and again, we expected these buyers to come in, right, and try to buy here. Look, easy to see why those buyers came in to buy it. But when they couldn't hold it, that's when those buyers turn to sellers, and guys like you and I are now off to the races to the downside. Okay, so Russell's clearly bearish at this point. It wasn't bearish. It wasn't bearish just for the pullback. It was bearish once we pulled back, tried to go higher, and then collapsed. That's when it's bearish. Okay, so buyers couldn't hold the lows. We expect price to test support levels below us, and we're selling at resistance. We're selling at resistance here on the Russell, right? Now, 1, 2, 3, you've got your levels overhead. Okay, you've got your levels overhead here to start selling this Russell. You've got targets waiting for you below. 1, 2, 3. Okay, measured move target. AB, CD. Okay, nice and easy there. And then one thing I want to go over here is volume. Okay, look at the volume. Now, you might be asking, when do you use volume? When do I use it? When don't I use it? Here's the deal. I look at volume when we're making new highs or new lows. Why? Because I want to see if it confirms. Think about it. Okay? Right now, we see a new low today. See the new low? 1, 2, right? There's a lower low right there. Now, you might be wondering, I know I'm wondering, are those sellers for real? Are they for real, for real? I mean, like, are they for, yeah, okay, we get it, Joe. Are the sellers really here? Okay, because, you know, there's a lot of times where you get this little fake out breakout, right? Like up here, right? Weren't those buyers for real? No, they weren't, and we knew that. So that's why last night I looked at volume, and that's why right now we'll look at volume, right? So we look at this and we say, okay, lower low in price, but is this just some funny business that's going to launch back up here, right? Was this just some low volume selling, maybe some profit taking, if you will, or you won't? Well, we look down bottom, you can see here, you line up the lows. This is just an easy technique, right? And guys, notice, I don't need some fancy indicator. I don't need all that crazy junk you see being hawked on all these YouTube videos right now. The only people that use all that crazy stuff are people who are selling it. And I guarantee you it doesn't make them any money. I'll tell you that much right now. Maybe it does. Maybe I'm crazy. I'd love to know. Send me some feedback. I'm JJ at SchoolOfTrade.com. Send me some feedback. Okay, but bottom line is right now, volume confirms the move lower. It does. Volume is rising higher while the price is going lower. What really puts the nail in the coffin for the buyers is, look at that. We literally ended the day down with the highest volume print of the day. That's not bullish, I'll tell you that much. So keep selling here, guys, on this Russell right now. Now you got the confirmation in the Russell. How about that 16 anchor? Another good-looking chart. We're on a roll here today. You're going to see a lot of these good-looking charts. By good-looking, I just mean, you know, a lot of clean lines. It's not difficult to tell where we're going. It's not very ambiguous. Very clear, okay? So right now we can definitely see. Where'd the text go, Joe? Come on. You slacking? Sorry about that. Didn't put a description on there. Sorry for the beeping noise in the background if you guys can hear that. Let's see here. What's my trend? Trend is down. How do I know? Red clouds, below the moving averages, lower lows, lower highs. Very easy to see, and we used volume to confirm on the last chart. So what's my plan? Sell, sell, sell. Sell, 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 right? Look for price to come up and swat it right back down. We got targets waiting for us below. 1, 2, 3. Easy targets below. Measured moves, measured moves, measured moves. You get the point. If you're a member of mine, you know exactly what I'm talking about when I say measured moves. And so we go up and we look to sell it right back down. Okay? Now, what if we go lower here? If we go lower, be very, very careful. Okay? Because we don't sell the lows. See, the problem is that if we go lower here, you're going to get roped right in. You're going to be given just enough rope to hang yourself with. So I'm very careful about selling at these lows. I would much rather just miss the move, oops, I missed it, and then wait for later on tomorrow, price comes off those lows when I can sell it right back down. Okay, so if we do go lower, you might get some short-term buying opportunities tomorrow at that 63.6 area, okay? So if we do go lower here, you're probably going to get some short-term buys before we get that long-term sell. My job here, though, is to tell you how to stay on the right side of the market. Right now, the right side of the market is going to be the short side on the Russell. Okay? Last but not least here on the Russell, price action. Price action is very bearish. And again, you see the difference here? See this chart? See how every candlestick is the same, right? Every candlestick is the same size. Look at this chart now. This is a tick chart, or what we call a variable open, high, low, close, right? Every candle is a little bit different. There's a lot of wisdom inside of these candlesticks. In fact, I talk all about how to read candlesticks in day number 5 of our free trial. I've got a whole chapter on the 3 most important types of candlesticks. Do you know what they are? If you know what the 3 most important types of candlesticks are, put it in the comment below this video. All right, I'll give you a special prize on that one. See if you guys have been paying attention. So, Russell price action, clearly bearish. We can see the bear channel, and we are headed lower. Now, I would expect to see a retracement off these lows, just the way it looks right now. But in all reality, though, you could easily see we may just slip and fall. So here's some scenarios for us. Scenario 1, we go higher, we sell it back lower. Breakout, fade. Okay, this little range right here is really important because this little guy gives us the ability for a bam, breakout, fade. Or breakout trap, or breakout retrace. See what I'm saying? Okay? So members, you know what I'm talking about. That's a trading range. See, what happens is, here's a good example. What happens is these markets trend. They can't keep going forever. So they retrace, they consolidate. Look what happened here. There's an example right there. Right? Little sideways range there, breakout, retrace, bam. Another trend down, can't keep going forever. We go sideways, breakout, retrace, blammo. All right? So use that range. It really should have been drawn in here. Use that range, right? That's a trading range for us to use. Scenario 1, we jump up, we sell it. Now, I would love to sell this area up here. Prior areas of consolidation make excellent price magnets, right? Let me say it again. Prior areas of consolidation. Okay, that's consolidation right there, right? Prior areas of consolidation, they make trading ranges. Those trading ranges make for excellent magnets and excellent areas, in this case, to sell short. See, all a trading range really is, okay, if you understand volume profiling, auction market, market profile, I teach all of that in our intermediate course. Okay, but if you understand volume profiling, if you understand auction market, you know where we have a range like that is basically a one big approval area to do business. So traders clearly approve of this range right here, or else they wouldn't have stayed in that area so long. So we know that the buyers and sellers agreed on value in that range there. They agree on value in this range here. I wouldn't be surprised if we go all the way up and then come all the way back down, right? Very, very easy to see that right now. So members, scenario 1, we jump up for a fade. Scenario 2, we go up for a trap. Scenario 3, we don't go up, we go down for a retrace. Nice and easy, okay? Stay to the downside here, guys, stay to the downside, okay? Don't force those things long. Okay, last but not least here, sorry for the length of this video, okay? Like I said before, a lot to talk about today. Now, here's a 64 anchor on crude. A little bit slower time frame than the others because I wanted to do some follow-up on this. We talked about this earlier this week. Crude oil is clearly bearish. We're pushing through the lows of this range. Now, here's what I'm going to go with right now. Take the range highs, take the range lows, copy, paste, bring it down. Right? There you go. Target down here, okay? That's 37. That's 37. Why don't we call OPEC and tell them and ask them what they think about $37 a barrel. What do you think about 37 bucks a barrel? Oh, I'm sorry, OPEC doesn't even exist anymore. Whoops-a-daisy. I should call the small farms in the U.S. that are doing all the fracking, right? They're the ones that really control this environment now, aren't they? Oh, you got to take any jabs you can against the OPEC. I'm sorry, but OPEC's been turning the knife for 50 stinking years, okay? They're getting what they're laying in the bed that they made. Absolutely, right? Tough to feel bad about it. But bottom line is we can see, I know, right? A little hostile there, JJ. Sorry. Anybody who's ever driven an automobile, ran a small business, knows exactly what I'm dealing with, knows exactly where that comes from, right? And it's been multiple generations now. Anyways, back on track here. Cool it down. Cool the jets here, JJ. Easy does it, killer. Okay, so we're pushing through the lows of this range. And boy, oh boy, have we seen how difficult it has been to push those lows, haven't we? Right? We've seen it. Now, what did I tell you guys all week this week and all last week? Don't worry about those lows. We don't even need to worry about trying to get through these lows. Why? Because we're not even going to touch them. What? What do you mean? We're going to sell at resistance. Look. Just keep selling at resistance. Look, it's happened 3 times in the past 2 weeks. Okay, this one gave us twice. This one gave us 2 shots. Once, twice. Right? Look, resistance, sell it. Resistance, sell it. You don't need to sell the lows. Never sell those lows. So keep on selling short. And we've got our targets down here for us. $40 a barrel. $37 a barrel. Yep. Who knows? Can't predict anything, but that's what the technicals tell us right now here on crude, and that's all we need to use. Moving forward, I apologize about this chart. This is a really ugly chart. There's a lot on this chart going on. I'm more inclined to give you too much than not enough. Let's put it that way. That's why I use multiple time frames. You're gonna see this little short-term channel. You're gonna see this short-term channel come into play here on the next chart. So just bear with me on this one. I want to show you this bigger channel, what I would call a channel expansion. Right? So there's really a small channel and a larger channel in here. Make sure you're aware of that. And then also, I think the most important thing on this chart, which is the reason why I have it, is A to B, C to D. Okay, see that there? And then A to B, C to D. Now you really got to look closely at this because that new low right there is what causes me to draw off that level. Okay? You might be asking, why didn't I choose that one? Why not that one? Well, because it didn't make a new low. It's an insignificant piece of this chart. Okay, so that high right there is insignificant. It's got no value at all. It wasn't a high. It wasn't after a new low, so I ignored it. So what that tells us, though, is, without going into too much detail here in this newsletter, what it tells us is we have a lot of support down here. Okay, you'll notice, right, the ABCD puts us there. The ABCD puts us there, right? So, we've got some serious support here between 44 and 43. So just be aware. This is why I'm going to say next, I would expect price to try to push a little bit lower, but I think the party might be over, at least in the short term here on crude oil right now for the sellers. Now, the volume all the way down at the lows says, let's do this, sucker, right? I mean, the volume literally that definitely confirms bearish, right? Here's an example of when I would use volume. I'll use volume right now because we made a new low today. And I want to see if those sellers are for real. Are they for real? They are for real. So these sellers are for real in this situation. That tells me keep on selling. 45.66, 46.55, 46.71, 47.91, 47.75. Okay? The best sell will come all the way back up and smack it right back down. Again, exactly what we've been doing for the last 6 months on crude. Okay? It's been paying really well. Now again, with these targets down here, if we go higher, perfect. Stay patient and sell that sucker at those red lines above. If we go lower, though, I almost don't even want it to go lower because we're going to really run into, like I said, we've got a lot of support down here. It's a little bit tough to justify selling short into $44 a barrel. Okay, so wait for it to bounce off those lows and then sell that sucker back down. Now, here's a much better looking chart, right? This chart looks a whole lot better on the old Ojos. Okay, so we got crude oil clearly bearish. Yeah, Joe, right? Everybody knows that right now. Nothing new there. Okay, nice looking channel, A, B, C, D, measured move target, 43.69. Okay, we've been calling for 44 all week. We got there. Tough to tell. Tough to tell if we go there overnight. I could easily see us going overnight because think of it this way. Remember, at least 1/3 of the world was asleep when FOMC came out this afternoon. Think about that for a second. Okay, if you lived in Tokyo, you were asleep when the FOMC came out. So when you wake up, well, right now, you're just waking up right now. If you live in Tokyo, you're now going to react to the FOMC report. So remember, the day after FOMC will usually get some spillover. Same thing happens with the Monday after non-farm payrolls, first Friday of each 1 month, okay? So I wouldn't be surprised if we go lower here. So just be aware. We're going to run into some significant support here. So literally, I don't see any reason why we may have an update tomorrow on crude. So you're going to get probably, if we go lower overnight, expect to see a nibble higher here, but be very careful being a buyer right now, right? You know why? Because you're going counter trend. But it's very easy to see, though, the measured move target will most likely result in profit taking and a reversal back higher. In the long term, we're going to look for move higher and then sell it back lower. Okay, so if you're a seller, you've got some get a wait here right now. If we go lower, buyers, right, nibble on that to the upside. If we go sideways here, which is also a very definite possibility after FOMC, if we go sideways, then treat this like a breakout. In my free trial, in day number 5, you're going to learn about breakout patterns. You're going to learn about 5 different breakout patterns in day number 5 of my trial. Okay, see, I told you, it's the best free trial on the planet, baby. Okay, breakout trap, breakout fade, breakout retrace. Just be careful of that breakout retrace because you're going to run right into that 43.69. Okay, don't say I didn't warn you. Again, right now, the right side of the market is the downside, but we know that we're likely to get some buying opportunities tomorrow as we come off these lows. But again, I want to see what happens here overnight, right? If we run lower, I would expect us now to move higher here overnight or tomorrow morning, okay? But if we don't go lower, then it's anybody's game for tomorrow. Then we're going to mark up that range, and again, boom, 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 sell at the highs, or if it goes lower, sell the retracement. But again, be careful selling into 43.69 there on the crude. Let's wrap it up. Got a long video here for you guys. Okay, now, I went a little overboard on this chart. I do realize. So do not get overwhelmed by what you're seeing here. This is some of the most advanced price action technical analysis that we teach here at School of Trade. But I wanted to illustrate my point. If you're a member of mine, this all makes perfect sense to you. But if you're not a member of mine, you're probably going, what did JJ get into over there before he hit record on this video? Right? What the heck is he having for lunch over there this afternoon? Bottom line, crude is bearish. And you can see we've got this big long-term channel here. There's no doubt about the fact that we're bearish. And there's no doubt about that we want to sell the highs of that range, right? There's no doubt about it. We definitely want to sell as this price goes higher. And I do expect price to go higher when you look at this chart. But it may go lower. It may go a little bit lower, like I said before, because, the kids are waking up in Tokyo. They're going to have their little smartphones, and they're probably going to sell this sucker short. So, again, I do expect, though, these buyers to step in and take this thing higher. It may be a situation where it tries to go lower, and then just the simple personality of it's going to bring it higher. And again, if you're a member of mine, you know exactly what I'm talking about when I say it may go lower, breakout retracement failure, right? Breakout, retrace, failure, back high, right? Back up. So sellers have made a killing on the way down, but nothing lasts forever. And when we look at this price action, you'll notice this is what I'm referring to when I say the markets have fractal tendencies. Okay? Go in my trial and I'll explain to you what I mean by fractal tendencies. Notice it's a channel inside of a channel inside of a channel inside of a channel. And I'll bet if I could go even faster on this, I could find channels inside those channels, right? Fractals, self-similar, non-integer dimension. It's called chaos theory, okay? Again, it's the most advanced stuff we teach to our students, and it works incredibly well because it leverages the simple fact that individual human beings are very unpredictable, but groups of humans are easy as pie to predict, right? Chaos theory. Go to Google. You'll see what I'm saying. Or go to my blog. I'll put a link below the video. So what we got right here is we got channel, down, down, channel, up, channel, down, down, consolidation. We should see price go higher here. One thing is for sure. It's going to be difficult for price to go lower. Okay? That's what we know for a fact. Is that what we see on this chart tells me that price is going to have a difficult time going lower. Doesn't mean it can't. Get that word out of your vocabulary. Can't, won't, fear, greed. These are all words. Get them out of your vocabulary. Okay? Never. Get that word out of your vocabulary. Okay? We know better than that now. So it can go lower. And if it goes lower from here and we don't get that fake out, breakout, retrace back higher, right? The failed retrace lower. Okay, members, you know what I'm talking about? If we just keep rolling over, I mean, we might go to 40 tomorrow. If this thing rolls over and keeps going lower, it has broken the DNA, the crowd psychology, which means we now have an irrational market, and markets can become irrational and stay irrational for a few days if they want to. Look what happened in December. Okay, don't underestimate this market. We're going to give you guys updates on this in real time tomorrow in our trade room. Okay, you don't have to do this on your own, guys. You don't have to do this on your own. Sorry for the long video. As you can see, I had a lot to cover tonight. Don't forget, grab your charts, grab your free pass, and register for the nightly newsletter mailing list. And I've been talking about this free trial for a while today. That's where you go. Go to SchoolOfTrade.com, register for the trial. We have the best trial on the planet. And yeah, that's a pretty bold statement. Don't take my word for it, guys. You can't believe what you see on YouTube these days. Take the trial. I'll prove to you I know what I'm doing here. If this newsletter hasn't proved it to you enough. Grab the free trial. Don't take my word for it. Make me prove it to you guys. And when you're here, don't forget to ask us if you have any questions about anything that is School of Trade. Guys, my heart goes out to all the folks being affected by that nasty snowstorm in the Northeast. Be well. Be safe out there. All right, thank goodness for the internet, laptops. We can trade anywhere we want. It's been beautiful here on the West Coast. I will not rub it in, but hope you guys have a great day. Have you picked your team yet for the Super Bowl? You know you have to be a Patriots fan, right? We're going to throw right to Sherman the whole time. I don't want to stir up any bad blood here, but go Patriots. Guys, have a great evening. Be well. Be safe tomorrow, all right, and stay profitable. My name is Joseph. We'll see you tomorrow. Adios, amigos. Bye for now.